All right, welcome back to Two Stupid Guys Trade Stocks. I'm Vinny,
I'm Dylan.
and today it's a fun one. It's Burry Miss, I like to call it. It's Michael Burry quarterly update number 2 for the year. Finally get to find out what the super investor mystique is doing behind the scenes,
and who he's shorting.
Maybe.
If you guys like this kind of entertaining stock market content, we're just two stupid guys trying to figure everything out ourselves. So give us a like and subscribe.
All right, we'll get to it.
Two Stupid Guys Trade Stocks.
All right, just quickly want to thank everyone for the support. We broke 1,300 subs today, which is pretty cool. We've only been doing this for a few months, but we're having a good time, and we'd love to have you guys join along the way. So for those of you who've never been on here before, this is a website called Whale Wisdom. It's a great website for tracking super investors and kind of seeing what they're up to. If you actually go to like the main page, you'll end up landing here once you put in Scion Asset Management, which is Michael Burry's family office. And you can see what he currently holds. So this is what we're looking at right here. These are the positions within his portfolio. Tesla put, he actually increased his position since the last quarterly filing.
35%? Wait,
Yeah. I mean, that includes like the actual value of the shares. But yes, Burry is increasing his bet against Tesla. That's the big headline.
Wait, if the previous percentage of his portfolio was 39 and now it's 35, wouldn't that be a decrease?
Yeah, so Whale Wisdom does this weird thing where it calculates the actual value of the shares. This is a put option, so it's actually not that many shares. But yeah, it's kind of a little bit throws you off there a little bit because the share prices actually come up, but his position, he's actually increased and purchased more put options against Tesla. He's still bullish on Facebook. He has been for a while. TLT, this is one that actually we talked about. We did a separate video about this, about Burry's bet against Treasury. So he's still in this, and he's still increasing this position, actually, Dylan.
He increased his position?
He increased his position.
Guess what I'm buying tomorrow?
I know, right? He streamlined a little bit. He was playing against U.S. Treasury in a few different ways before, but now he's kind of brought it right down to a put in this TLT, which is a 20-plus year ETF for U.S. Treasuries. So he is betting against the betting on the discontinuation of the purchases by the U.S. the Federal Reserve, and therefore increase in the yield of long-term U.S. Treasuries. Still bullish on Google. McKesson, that's a new name for him, actually, a supplier of medical devices and equipment. I don't know if you use any of their products. They supply a lot of medical offices. But yeah, he purchased a call on them. Kraft Heinz, he's been in this play for a little while, but now he's got a new call option on them. He's actually owned shares of them previously in the past there. Walmart call, which is actually interesting. I was looking at Walmart this week as well.
Yeah.
I think that the whole child care stimulus, basically the child tax credit monthly payments is going to be bullish for Walmart, I think, for at least a period of time. So interesting one. Cardinal Health is another medical supply company. I've heard their name before, but I've never actually used any of their products, so I'm not particularly familiar with them. But
we'll have to look them up to see if I should put money in it.
Yeah, CVS. CVS is one that keeps kicking myself in the butt for this. So I remember the day that Amazon announced their pharmacy, and CVS just kind of like tanked, and I was like, oh man, I should just buy some. And I didn't, and that was last fall. CVS is up like probably 30% since then, at least.
Yeah, that's what it is.
Yeah, all right. This is another headline. You know what this is?
This is what I was waiting for you to get to. This is what I'm excited about.
Cathie Woods. Cathie Woods, our girl. I just want to go ahead and pull this up so we can take a look at it. This is Cathie Woods, flagship ARK Innovation ETF. This is their performance so far this year. Kind of peaked there. What is this, like mid-February, and it's been in a downtrend since. Yeah, I mean, I was just remarking this weekend that when the market finally comes back to reality a little bit, like if there was an inverse ARK ETF, like that would be where I would want to put my money.
Isn't this like kind of like the most, I don't want to say disrespectful, I guess ballsy thing to do, because he's like a hedge manager and she's a hedge man. He's shorting her performance as a hedge manager.
To a degree,
sort of.
Yeah, I get what you're saying. That they're two opposite sides, though. Burry is very much a fundamentalist and cares about the value of the investment more than like the growth.
They look at the market completely different. I'm just saying, like, it's like calling you out like hardcore.
Yeah, I would say so. The gloves are off in this particular fight. If I were betting man, I would have bet on Dr. Michael Burry over Cathie Woods.
Yeah, same.
I think 90% because Cathie Woods looks like my mother-in-law, but that's a separate thing. So this is actually the top holdings of Cathie Woods ARK ETF as of August 16th. There's obviously some crossover because Burry has that big bet against Tesla, and almost 11% of the ARK Innovation ETF is Tesla in of itself. I just wanted to highlight this. So Tesla, right? They had actually a pretty bad day today because it was the announcement regarding Department of Transportation investigation into their autonomous driving. But one of the things I wanted to bring up with Tesla here is look at this PE ratio. Yeah, I know they're growing like wildfire, but a PE ratio of 361, absolutely like insane.
Not to mention, not only is it a PE of 361, and before anyone who's watching this brings up a bunch of companies that also had high PEs that were crazy, they're also losing their number one most profitable. It's not really a service. The way that they make money, which is pollution credits, because now everyone else is building EVs. Yeah,
I still think Tesla's going to grow over the next decade, but the problem is that I think that they've gotten so far ahead of themselves that if you're looking at a long-term play here, that your money would grow somewhere else faster. At this point.
Regarding Tesla's earnings, do the pollution credits that they sell go into that earnings calculation? All right, because that PE is going to get way higher over the next 2 years.
I mean, but they are growing.
In my opinion.
They are growing. We'll do a separate video on Tesla. They are growing, but still, from Burry's standpoint, I completely get the logic behind this bet. There's actually an interesting one I want to highlight before this video gets too long. So other things are still in Discovery. I actually bought some shares of Discovery today too. They're trading at 6.5 times EBITDA. It's ridiculous. I don't know where it goes. It's a pretty sticky product. I have the streaming service, so that's why I'm like, I just gonna go ahead and put some money into it. But so I did. Still playing the energy sector pretty heavily here. Pan Canadian Energy. Let's see, CVS is the long shares. Geo is the prison REIT. Yes, I know he's still in the prison REIT. CXW, still another Core Civic, another prison REIT. STNG, Scorpio Tankers. So one of the things that Burry was kind of early to was that, with this whole kind of massive spike in consumer demand is that shipping got really hard. Shipping timelines started to expand. Shipping became very much in demand, right? Let's go Scorpio Tankers. That's one of the positions here. I want to show you a chart here. So we know Burry held it as of right about here. He may have sold this position. We don't know because this is as of the end of the second quarter, which is ends June 30th. Scorpio Tankers had a pretty decent decline here throughout the whole month of July and it's kind of made a bottom in the beginning of August. This might be an interesting one for you, Dylan.
Yeah,
so
I'm writing this down, actually.
Yeah, STNG. So right about the time that it bottomed, the president of STNG, Scorpio Tankers, bought 500 call options at the $15 strike price expiring in January 2023.
At the $15 strike price?
$15 strike price, yeah. What do you make of a president of a tanking company putting $230K into his own company and call options?
I mean, that's a confident man. I would get behind. I'll throw $2,000 at it. I'm okay with that.
I know, right? Like this is. I definitely want to do some deeper dive into this, but I had heard something about this recently, and I now that I see Burry's actually still invested in them, I'm definitely very interested. I want to do a little bit deeper dive into them, but it's an interesting play. And like I said, when you see insiders putting that much money into it, especially when you're using a call option, which is a levered bet, like that's pretty bullish to me.
It is, and we don't know he's still in it, but logically, from where he bought it, it would be actually lower. Because he was only there for the last 3 months, and it looked like a tank, but quite a bit.
Yeah, exactly. And then in terms of other things that he kind of closed out of here, this right here was another energy company. GNK is another shipping company, and he. Let's see, 1 second. And so, like I was saying, he kind of streamlined his positions about Treasury, the triple T here. He got out of that one entirely. IWO. This is a short of the Russell 2000. Russell 2000 has been pretty flat, so that kind of makes good sense. And then this is another long-term Treasury, kind of ETF here that he also exited the position. So in terms of Treasury Bets, he just now has the one. Sorry, phone's blocking everything. The one against I think it was that triple T, TLT right here. Sorry, that TLT put.
Yeah, which is what I have. That makes me feel better because it's not doing well.
No, I know, but I think
it's a long-term play. It's a long. It has a 16-month expiration on my put. So
exactly, you're waiting for the Federal Reserve to finally taper their purchases, and there was an article today, I think, on CNBC about how now there's support for potentially doing it as early as September, October this year. So you're going to get a quick spike up at that point. If you're profitable, I would just take it and run. I wouldn't stay on that too long, but you're going to get a spike.
Nice. Down.
Yeah. What do you think, man?
I am. I'm all about. I want to see what happens with him shorting ARK because I just that's the biggest call out ever.
Yeah,
that's just one hedge fund manager shorting another hedge funds manager portfolio. That's crazy.
I completely get it too. Like I was saying, I was literally having the same thought process. I'm like, man, I was like, I want to own an inverse ARK ETF when the time when there's finally a mean reversion in terms of valuations of some of these companies.
Yeah, that's insane. I'm going to buy some STNG.
Yeah. I'm going to do a little bit more digging. Like I said, I bought some Discovery already today. It was time. They seem too cheap on a kind of a market cap to we call it EBITDA basis. So
right.
All right, guys. Well, let us know what you think down below. If any of these plays are for you, by all means, I'm curious to hear what you think. Let's catch you on the next one.
All right. Have a good one, guys.